And it's a brand new week. Good morning, good evening, wherever the world you're watching from. It's Business Morning coming to you live from Channels HQ right here in Lagos. And definitely, it's time to get the agenda, set your investment agenda for the week. Now, let's start with oil prices. We see they're open lower today as market participants dialed back risk premiums. You see Brent futures for June down about 24 cents this morning. Most market analysts were expecting some kind of jump, today for Monday on the back of geopolitical tension right there in the Middle East. But we're seeing oil prices down. Brent is down 24 cents. WTI down about 38 cents. Some say maybe it's already priced in from Friday because markets were actually expecting tension, in the Middle East. And I'm sure that's already priced in at this point. Seeing oil prices down to start the week. But definitely it's still very early in the week. A lot to, go through to see how much volatility we're going to see in the oil markets for this week. To other matters now, we see to the annual meetings. Over 15,000 persons are expected at this year's annual meeting of the World Bank and the International Monetary Fund taking place in Washington, D.C., United States. The annual meeting will bring together heads of the World Bank, the International Monetary Fund, central bank governors, ministers of finance, members of private sector, and civil society to discuss issues of global concern, including the world economic outlook, global financial stability, poverty eradication, jobs and growth, economic development, and aid effectiveness. The Minister of Finance, Mr. Wale Edu, and the Central Bank Governor, Mr. Yemi Cardoso, are expected at the meeting and will be sharing experiences on what Nigeria has been up to in addressing income inequalities, job creation, and improving its human resources, and also huge debt burden and infrastructural deficits. The meeting is also expected to offer an opportunity for civil society organizations to share their views and interact with policymakers in their global setting. To the electricity market, now we see Ikeja Distribution Companies announce an addition of 34 new Band A feeders to its network with a view to increasing power supply to customers following the hike in electricity tariffs for Band A consumers who enjoy at least 20 hours of electricity daily. NEC mandated discos to ensure those in the category receive 20 hours of electricity supply daily. The regulator also stated that when discos fail to provide such, it should be published. It should publish the reason for the failure on its platforms on the next day. So a lot to go back there. But now let's start with our first conversation. Now we see, obviously, Iran launched a retaliatory strike on Saturday night in Israel for its deadly attack on Iranian officers in the Islamic Republic's embassy in Damascus after days of signaling it would do so. Markets trading in the weekend reacted. Markets like Bitcoin, that one never sleeps. It did fall to that 60,000 level. So now let's gauge the expectations for what happens, going forward. Would there be escalation? What this means for the energy market? Joining us now is Mr. Dan D. Kunle, energy and infrastructure expert. He's also a former special advisor to the Minister of Petroleum Resources. He joins us from our Abuja studio. Great to have you on the show, sir.
Laddie.
Yeah, so the first trading day. Yeah, good morning. The first trading day kicks off today, and investors have their eyes on geopolitics right now. Some are already saying oil prices could hit $150 on escalation right now. But Monday is starting off quite stable. That's talking about oil prices. What are you expecting could be Israel's response to the attack over the weekend?
Well, thank you very much. The situation now is requires a very careful observation and careful analysis, because you can see that the market did not react spontaneously compared to what happened in 1973, 73 Israeli-Arab war. You can see that the market over the years after COVID have strategically balanced because of the rate at which United States of America is being mobilizing to produce so much hydrocarbon. And you can see Saudi Arabia has also strategic balance in their production output. And you can also see Russia have reasonable volume of crude in spite of the escalation between them and Ukraine. So you can see that the market, today, Monday, you will see all the traders will watch pronouncement from Israel before the market, because there is reasonable volume of commodity in the market, particularly crude oil and gas. So that is why you have not seen sudden escalation. So I believe in prices, you have not seen a jump. So this is the situation for now. It's still a very careful observation.
Right, all eyes on major commodities market definitely for this week and today. But with the volatility in the global oil market, with this Middle East crisis, what does this pertain for the Naira? We know higher crude oil prices. That's good, for revenue for Nigeria, but that also translates to pressures of petrol subsidy, erasing gains, on Brent prices. How are you seeing it?
Yes, Ladi, this is why you need always to have business intelligence analysis, because if this escalation now result into sudden increase in the price of crude oil to maybe $100, you will now see that Nigeria, two things will confront us. Do you have internal capacity to ramp up your production and sell more crude to the market that needs it as $100 so that you earn more dollars for your foreign reserve? And that will help you to stabilize the exchange rate at maybe 1,000 Naira to $1. But if you don't have this internal capacity now to ramp up your production and supply the market gap that this escalation may likely create, then we are back to square one. It means we did not build capacity in the past. So again, you are now going to import finished product, white product, for your domestic market, because Dangote refinery is not yet producing white product, enough white product to meet the market need. So that gap you are going to import, particularly PMS, you will import it at a very high price. So you will still pay subsidy, whatever name they call it. As the situation is today, we are still paying subsidy somehow. Okay, but I think President Tinubu is managing this carefully. So that is it is all boiled down to energy security and your internal capacity to respond to exogenous issues like this, war, pestilences like COVID. These are internal issues we need to revisit and readdress quickly as a nation. We need to sit down and say, what do we have in stock? What do we have on ground? How fast can we bring it out? How much investment have we made in the last 5 years, 6 years, 7 years into our upstream exploration and exploitations? So both for oil and gas, because you can see the energy security of the world, how it is balancing out, strategic balance. You can see Europe is heavily dependent on America now because of the Atlantic Basin advantage. So whenever there is an escalation in the Middle East Basin, where used to be the main source of energy supply to the world, this is what you get. But America have strategically over the years, from 1974 crisis, 1973, 74 escalation, and the 1979 Iranian revolution, you can see that America have ramped up strategically at home to make sure they are energy secure. Nigeria must look internally. Can we be energy secure at home? And can we have extra capacity to export more to earn dollars, to diversify our economy to agriculture?
All right, talking about...
So this is the situation.
Talking about getting more crude oil out, at this time. If you look at the production in the first quarter, that's for Nigeria, we see that January had about 1.42 million barrels per day. That was the output, and we see February it's been a downtrend, for the first quarter, 1.32 million. That's for February, according to OPEC. And March, that came in, that's the latest one, 1.23 million barrels per day. So we've seen that downtrend, in the first quarter. That's for oil production. Why are we seeing this happen? And do you see this continuing into the second quarter of 2024?
Thank you very much. I'm always very sad looking at these figures. Because why is it that instead of us to be heading for 2 million up north, 2.5 million, why are we always coming down? Even though the technical justification for this last month performance is understandable, that there are some maintenance and there are some other issues that are holding down about 200,000 barrels. We come back to the market before the end of this month. Hopefully, Nigeria is a very difficult environment to predict. But it's very sad when you look at this figure. This country, our reserve is close to 38 billion barrels. Even our onshore reserve alone, we should be doing between 2.8 million and 3 million by now. So something is really wrong. And I still want to be inclined to ask Mr. President Tinubu to put up his crystal ball glasses and look critically into the structure of NNPC and ask, what is the problem? Why is it that you cannot increase production of crude oil when you have all the reserve already established, when you have most of the field that have aged, but you can invest and revive them quickly? Take, for example, some OPL, some oil mining licenses that are in the hand of MPDC and the owners. Ask, why are they not producing more than what they are doing? What is the problem? Where are the bottlenecks? So this is the issue. How can you use 1.2 million barrels a month or a day to look after 200 million people? Just look at the gap. So I think it's unfortunate that the cost center of this country today is the money you make upstream, you are losing it midstream, downstream. It's very sad. So now you take this one and relate this output on daily basis now to the energy need of the country, electricity. So how are you going to cross-subsidize electricity? Because it is when you make so much money from upstream crude oil export and gas that you can subsidize electricity in one way or the other. How can you subsidize agriculture also? When you're earning with your daily production from oil, that is your golden egg, is so poor like this. So I think there is still a jigsaw requirement. I am not after any particular person or individual in NNPC structure, but I think that structure is weak and need to be resolved. Something just has to happen. Why the president has taken this long to look into that place, we don't know. But whatever it is, I am very sincere in my mind. Something's really wrong somewhere. We need to look at it. So it's very painful to see that we have a reserve, we have resources, but we cannot bring out anything reasonable.
Definitely, this plays into the strengthening of the Naira. We definitely need to get more output out and enjoy some of the high prices we see in the oil market at this time. But also got a report by Bloomberg showing that Nigeria's crude supply for May loading has been very slow to find buyers so far, with more than half of the scheduled cargoes yet cleared. What would you say is the cause of this? Why are we seeing low demand for these cargoes in the global market?
Laddie, don't worry. The market at times can have some internal issues if you are involved in the geopolitical and the geoeconomic zoning of the world about commodities like oil. If there are laws at times for your commodity to get acceptance by traders, there may be reasons. What is going on in Singapore, what is going on in Switzerland, what is going on in some zones of the market may be the reason why there is no immediate trader to accept those commodities. But I can bet you, within this week, from what has happened between Iran and Israel now, you will see that those commodities, those vessels, they will get off-takers immediately. So it's not a big issue. That one is not a big issue. The real issue is how much volume can we take to the market to earn more Naira and more dollars to stabilize our exchange rate. That is the problem, because you cannot stabilize the exchange rate when your earning in dollars is weak. You cannot, because our demand, our lifestyle in Nigeria today is still largely tied to dollar. It's a petrodollar economy, whether we like it or not. Everything we use, including the channel on which I am talking to you today, they are driven by dollar. Everything. Even the apparatus and all the gamut of resources and material and hardware you need to produce the oil and produce food is all dollar driven. So don't worry about the cargo that is hanging in the Atlantic Ocean or somewhere across the world. They will get off-takers. Even those ones that are yet to leave our shore, they will get off-takers within the week. It's not a big problem. Right. The market has enough room to take. We may only suffer a discount. We may be forced to accept what you call forced sales value. They may just tell you, oh, we cannot pay you $80. We will give you $75. You like or you don't like, you take it. But it's not an issue. That volume is nothing in the marketplace.
Okay, we'll definitely keep tracking that. But all eyes on geopolitics right now and how that's impacting global supply chain. We see the major trade routes like the Red Sea is also heavily impacted at this time, and most of the refined products coming through most of these corridors at this time. So talk to me about how we can hedge against issues when it comes to bringing in refined products at this time, and how our refineries here, like the Dangote refinery, is playing into all of this.
Yes, Ladi, I'm happy you touch on this very issue. You can see that the Middle East basin, you can see that once there is a disruption in the Arabian Sea towards the Indian Ocean and towards the Red Sea, largely it means that situation is going to give advantage to the operators in the Atlantic basins. That is the Guyanas, the Venezuelas, the Mexicos, the America of this world. So every time there is a fight like this, somebody gains. The Ukraine war and Russia, America gain. They move all the gas in this world to the market in Europe. So now that there's a little tension in the Middle East, which I believe is going to be moderated because of the strategic balance, Iran have seen now that there's a strategic balance. They cannot get massive support compared to the type of support and cooperation they got in 1972-73 during the Israeli-Arab War. Because nations have evolved, their socio-economic status have evolved. So a lot of countries are beginning to be more conscious of protecting their citizens and their income. So I don't believe that this escalation in the Middle East basin will last. But the temporary advantage is for the Atlantic basins to fill the gap that the escalation may create in the market. Nigeria, do we have the capacity? We are back to capacity again to take advantage, because we are lucky by geographical location. We are by the Atlantic. So we can move product easily from here to Europe without crossing the Red Sea, without going anywhere there. So it is only Pakistan, India, and the Southeast Asia that may feel something, because what Qatar and Iraq and Iran are supposed to move may not move. So Saudi Arabia also may suffer temporarily. That is also the reason why all these countries may not easily jump to cooperate with Iran, because their national interest, their sovereignty, and economic survival is at stake. So the whole situation, let's dimension the win-win, not the lose-lose. Because everybody will lose if the whole thing escalates too much. So at the moment, let's just leave it like that. Nigeria, as you have said, Dangote will have an advantage because he's not bringing his crude oil from the Middle East basin. He's bringing his crude oil from America, the Atlantic Basin advantage. So he's pretty good where he's located. So he can ramp up production and supply the market. So while Nigeria, if we are not careful, our imported refined product, the price may escalate. But let's watch. Let's use this week to watch. Maybe by the time I'm back here next week, if you give me the privilege again, we may be talking in another way.
Right, it's definitely a watch and a wait and see moment at this time, and definitely this is playing into the inflation story globally, because we know with higher oil prices that feeds into inflation, and definitely that kicks the bucket down when it comes to rate cuts. Every investor is expecting rate cuts at some point, but we'll see how it all plays out. Thank you so much. It was great having you on the show today and your perspective. That was Mr. Dan D. Kunle, former Special Advisor to the Minister of Petroleum Resources and Energy and Infrastructure Experts. Thank you so much.
Thank you very much, Ladi. Thank you, audience.
All right, so we'll take a quick break now. When we come back, we head straight to the markets. That's in a moment. Just stay with us. Welcome back. Well, we'll head straight to markets. Now was risk-off sentiment that resonated in the Nigerian equities market for the 2 trading sessions in the week. That was last week. We did have public holidays for most of that week, but it was risk-off sentiment with the NGX all-share index down about 1.09% for the week. And we see the equity cap sitting at 57.865 trillion. And we see the banks again. The banks were hit big again last week. We'll see volume, value, deals all in the red, compared to the previous week. As expected, it was a holiday shortened week. 1.13 billion, that was volume of equities traded, valued at 28.65 billion naira. Let's look at the sectoral performance now. It was all red there. Banking, that was hit by 7.22% down. Consumer goods down about 1.33%. Even the oil and gas counter, which is normally on change, oil and gas was down about 0.28%. We see insurance, that also follows the banking counter. Financial services down about 2.45%. Let's look at the top trades now for last week. We see Morrison Industries, that was up about 20.75. That was the top gainers for the week. 20.75%. Wando PLC, 10.57% gain for the week, even though it was a holiday shortened. Well, let's look at the top losers now for the week. We see Access Holdings PLC, that was down big, 14.60%. So today, we're expecting inflation data for March. Analysts are forecasting a marginal rise. Joining us now is Bankole Odusonya, Chief Dealer, Polaris Bank. Great to have you on the show. Great to have you.
Good morning, Ladi.
Good morning. Yeah, so we're expecting inflation data for March today. Some are saying it might not come in hot today. What are you expecting?
Inflation is currently moved from 29.9 to 31.7. We do not expect a spike. We expect it to remain around that level. Of course, some analysts and researchers think that by now we should be seeing base effects coming. I mean, given the high prices we suffered last year at about this time, because our computation method is year on year. But if you look at food inflation, the price keeps going up, and that's the major factor in the basket that is used for computing Nigeria's CPI. The other issue at hand is the new price subsidy removal on power pricing. We do not expect an immediate impact on that because there's still a lot of discussion and engagement on that. Of course, that also does not impact the whole country. It's been said that less than 15% of the consumers will be affected, but definitely it will trickle into affecting prices, given that petrol is also unsubsidized. So cost of production basically will be affected if pricing is increased on, in some cases, about triple on power pricing, basically.
All right, what are you seeing? Let's head to the FX market now. We got some reports earlier that the Naira was trading sub 1,000, in some parts. What are you expecting for the week, for the Naira against the dollar this week?
We have seen 1,100, 1,000. It's still around 1,100, 140. That was when NAFEM closed. It is very true that there are very, very serious interest from foreign portfolio investors, especially from the Middle East, probably, diversifying away from the Middle East. Over the weekend, I got calls from the Middle East where some colleagues wanted to know about today's bond auction that's coming out today, and the 2027 bond instrument that is no longer on offer. It's a 3-year instrument at 19.4 coupon. It's no longer on offer. They are interested in coming to pick them up at the secondary market. So that means there's going to be more dollar inflow into the economy in exchange for Nigerian instruments that's about effective yield around 20 to 27%. So, given the prospect that Nigeria has, given the strength we've seen recently on our currency and the stability potentials, we're going to see more inflows, and then we expect more strength to the Naira. So we haven't seen 900, but it's a possibility.
Right, and definitely it's all about Israel-Iran conflict right now. Geopolitics is on the radar of most investors, at this time. Talk to me about risk off sentiment. Is that a real thing that I'm becoming to Nigeria, at this time, following geopolitics and most of the tensions we see in the Middle East?
Okay, so, like I just explained to you on Sunday, I've seen some Middle Eastern brokers and foreign portfolio investors start they're beginning to look at Nigerian Treasury bills, 1-year instrument, and the shortest bond in the market, which is at 19.4%. So basically, it's portfolio diversification, and then, like I said, risk of the Sub-Saharan Africa bonds are looking very good. All through last week, if you get the data, you can see Nigerian Euro bonds too were also positive. That we ascribed to crude oil price exceeding $90 per barrel. As we speak, it's at 89.6. It's dropped a bit, going to end of last week due to profit taking. But if this conflict that has happened in the Middle East continues, crude oil price continues to go up, the potential of sub-Saharan markets continue to increase. Like the earlier speaker said, the Atlantic trade improves, and then, those who are diversifying portfolios simply look at Nigerian instruments and opportunities in our equities markets also. So we're expecting more to gain more from this challenge. We just have to position ourselves very well to ensure that we take advantage of this momentum and then use that to stabilize Naira, if we can't even strengthen it further, to stabilize it at this level so that most of our investors, local and foreign, can have a planning, space to plan, with a stable currency, basically.
Right, and I guess we're all hoping for peace, in the Middle East at this time, definitely. Thank you so much. It was great having your perspective. Mr. Bankole Odusanya is the chief dealer at Polaris Bank. Thank you so much. All right, so that's it for me on Business Morning. We'll track more market reactions later on Business Incorporated. That's by 1 p.m. as markets brace for Israel's reaction to the attack by Iran over the weekend. I'm Ladi Williams. It's back to the Sunrise Daily team.